we have the next management as well.
Well, that's right. Let's focus on Polycab. You know, the numbers have actually been resilient, though government capex is yet to pick up and there is signs of slowdown. But their growth has continued, which is heartening from a shareholder's perspective. We're now joined by the CMD, Mr. Inder Jainsinghani, and also Mr. Tongya, who joins in on the show. Hi, gentlemen. Good morning. Good to see you all in. And congratulations, actually, on yet another solid showing. You know, though there's a slowdown in government capex, there's a high base as well. Yet your cables and wires business is delivering double-digit growth with stable margins. So good to hear. Let's get a couple of factors out of the way. What was the volume growth for the past quarter? And if you could help us out between the mix, cables as well as wires for the past quarter.
Good morning, and thank you so much for having us. You're right, this was perhaps the best quarter as far as the first quarter is concerned. On your specific question on the volume growth, cable and wire business, which contributes 85% to our top line, registered a mid-20s volume growth. Within that, cable grew at a level slightly more than that, late 20s, and wires grew in early 20s. So overall, it was a mid-20s volume growth.
And what is the mix? Mix between cables and wires?
Broadly same, around 70% is cable, 30% is wire.
Okay. All right. So that's about this quarter. Was wondering whether, you will continue this sort of growth going forward as well, because your long-term guidance is mid-teens in cables and wires. So that's the point that I wanted some clarity on. And the standout performance for the last couple of quarters has been FMEG. This despite, uncertain summers, etc., the fans business taking a bit of a hit. Your solar pumps business has done extremely well. So an outlook on both cables and wires volume going forward and the FMEG business with operational performance there.
Absolutely. So you're right. There is a bit of a mixed bag, but we gave our guidance in Jan this year for the next 5 years, wherein we believe we'll continue to grow at 1.5x of industry growth in cable and wire sector. And as far as FMEG is concerned, perhaps a 2x of the industry growth rate is what we would probably anticipate and aim for. On solar, you're right. There is a fair amount of favorable macros there. The government spend is there. We do solar panels and other than the solar as well, the FMEG business has registered a fair amount of growth, right from lighting, fans, switches and switchgear. On that, we believe the profitability will continue to grow. It was around 2% this quarter, break even in the previous quarter. And between now and 2030, we should be able to get to almost 10% of EBITDA margin in FMEG business.
Okay, all right. Let's talk about margins. You have reported a margin improvement of close to around 200 basis points. How sustainable is this number? If you can help us out with that.
I'll probably take you back to 2030 guidance, wherein we have suggested that FMEG will improve its profitability from 2% thereabout to almost 10%. And in cable and wire, historically, we have been guiding for 11 to 13%. There were a few quarters wherein the numbers were better than that particular range. We believe that we should continue to aim for a similar guidance of 11 to 13%. There are some upsides possible. For example, exports business, if it improves meaningfully in years to come, it's quite possible that we are able to beat our own guidance.
Now, exports, there's been a good improvement actually on a year-on-year basis, but on a sequential basis, there's been a bit of a dip. I know your guidance is to get to that 10% odd mark, but for this year, how much will exports contribute? And are you seeing a fair bit of traction? Because, with competition heating on the domestic front, all eyes are on exports as well. Not in the near term, but in the next few years, that could be a big driver as well. Tell us more.
Absolutely, you're right. Exports is going to be a good driver for us as well as for the industry. We already have a presence in 80 plus countries. We have many international approvals, for example, for the geographies like US, Australia, Middle East, and EU. You're right. We are aiming to get to 10% of top line contribution from exports business. And generally, we are of the view that every year we should be able to improve on it. We are hovering around 5%. Every year there should be some improvement.
All right. Every year there should be some improvement in exports. The domestic, obviously, by the announcement of large players entering this space, everyone's wondering how the situation will play out. But we leave that for a longer-term discussion as and when, they enter the marketplace and products are out for everyone to see. But Mr. Jainsinghani, I wanted your thoughts in particular on the BharatNet opportunity. Time and again, we see news pieces of you bidding for that, you getting some more opportunities. What is the total addressable market here and what is your opportunity possible here over the next, say, 1 or 2 years?
This is basically a long-term project, which is a government one that every village has to be Wi-Fi connected. So, which is a project we are taking has to be complete within 3 years. And again, new tenders will come. So already we got Karnataka and 2 states. I think so 1 or 2 states will take more, and we'll see that how best we can do. Our full team is ready for that, and already work is started in Bihar and Karnataka both.
But how big can this business be? Gandharv, if you could throw in some numbers here. What is your current orders coming in from BharatNet, orders on hand? And what is the addressable opportunity here? How much can you get over the next 3 years?
Basically, around about 8 to 10,000 crore already we got the order, which is we have to complete within 3 years, and which we are going to start from October onward. But again, we can think that we can take 5,000-6,000 more, because it has to be complete within 3 years. It cannot be prolonged.
So, okay, 8 to 10,000 crores is what you have already. You can expect to get around 6,000 crores more worth orders.
Yeah.
Has to be completed over the next 3 years. Is this at a lower margin than the other businesses? And what are the receivable days on this?
Reasonable margin. Payments are very good. Once milestone you are completing, you will get the payment. So it is on milestone system. And again, we have to do the maintenance services for further year also.
And margins are in line, right? Receivable days in line, both are in line.
Yeah, both are in line.
Okay, got it. If you could also tell us, your market share, you'll have been outgrowing the market. In the past quarter as well, according to your numbers, according to your calculations, have you all gained market share?
So I'll probably take you back to March numbers, wherein we believe our market share of the organized cable and wire market is around 27%. Directionally, we believe we would have gained some additional market share in this quarter, but I think we'll have to wait and watch for the other companies to declare the results. As you know, we are the first as of now in the industry to declare our Q1 results. Okay. We'll wait for them, and then perhaps in the next quarter, we can talk about the market share gain.
What about advertising expenditure? It's not too large a number, but that's come down by more than 35%. If you could tell us, what should the rough ad spend be as a percentage of sales, and will it pick up from here on?
You're right. It's an important expense line item for us, particularly for the B2C business. We believe in the second half of the current fiscal, we should be able to meaningfully improve. Directionally, it should be in the range of 3 to 5% of our B2C revenue. B2C, as of now, is almost 1/3 of our company's revenue. So that is how we can, think about the B2C advertisement spend in years to come.
And you have a aspirational target of B2C versus B2B sort of business, right? I think it was half and half.
I don't know whether we actually gave that guidance externally. I don't know the source of your half and half information.
I just bowled a googly. Please tell us your guidance.
Yeah. Internally, what we believe is we'll have to continue to grow at the industry level. We'll probably aim for growing at a rate which is going to be significantly better than industry growth rate and gain more market share. As of now, government capex is positive, which is helping us in growing our B2C business. We are trying our level best to make some inroads on the B2C side of it, both on the retail wire and.
But half and half, give us the mix. Give us the mix.
Coming to that. Both the businesses will continue to grow. It's difficult to imagine that we would be able to get to 50-50. We are hovering around 70-30. Hopefully, we would be able to improve a bit on the B2C side, but B2B business is doing tremendously.
All right. And C&W and FMEG, do you have a target there in terms of optimal mix?
Yeah, that is already what I was mentioning. The cable and wire and FMEG, both put together, is aiming for industry-leading growth. Whatever current ratios we have is quite possible over the period we are able to tilt more towards B2C business, but B2B business is doing a tremendous job. So it's going to be a good fun to watch.
And, we have been enjoying our interactions with y'all, as you all moved into profitability on the FMEG side of things, and now profitable at some scale. Demerger is something that you all would look at?
I think this is a thought which friends like you have shared with us over the last few years. We have not...
we can share all the thoughts, Gandharv, but y'all are the executors. So,
we have not deliberated on it. At the right time, probably board will discuss, deliberate and see what are the pros and cons and accordingly take decisions. As of now, there is no current proposal.
Indar, Gandharv, thank you so much for joining in. We've been bowling googlies at you time and again, and you've, either decided to leave it or, just defend it out here and say that, okay, we will probably go ahead and do things as and when the time comes. Thank you so much. Thank you for joining in.
And solid form today. And thanks a lot, gentlemen. Numbers speak louder. So thanks a lot. And looking forward to chatting up with you as the year progresses.